A lot of people are worried about their bank these days. While devastated giants like Citigroup get bailed out again and again and again, many smaller banks are failing. The federal agency that takes over unsound banks is the Federal Deposit Insurance Corporation, the same people who guarantee that depositors won't lose their money. Most every Friday now, the FDIC is seizing several banks. You haven't seen these takeovers happening because they're done secretly at night to make sure that there's no needless panic by depositors. But last week, we were given extraordinary access to one of these operations because the FDIC wants you to see what happens to your money when your bank has failed.
They're going to start at one branch, pull the cash out, take it inside the bank.
This is a team of FDIC agents preparing to seize a bank outside Chicago.
What we need to do is we need to pull the corporate records.
They've checked into this hotel under a fictitious name, CB and Associates. To prevent a run on the bank, they don't want anyone to know who they are or why they're here.
You all know that this is for the closing of Heritage Community Bank.
Cheryl Bates and Arthur Cook are in charge of the operation that has been given the code name Happy. Strange, considering what they're about to do.
Do not discuss outside of this room what is going on, what we're here for.
They're here to seize all 5 branches of Heritage Community Bank, a 40-year-old local bank providing savings, student loans, mortgages, and checking. But like so many others recently, Heritage made ruinous bets on real estate. Sheila Bair is chairman of the FDIC.
How many banks failed last year?
25.
How many do you expect to fail this year?
It's going up. There have been 16 already now, and so our loss projections are going up. We're having to increase premiums on banks to address the loss projections going forward. It's a very distressed environment right now.
I wonder if you have a number in mind of how much the FDIC is prepared to pay for bank failures in 2009.
Well, we make a 5-year projection that for the next 5 years we project that we'll lose $65 billion on bank closings.
$65 billion?
$65 billion.
Some of that was about to be spent on the imminent failure of Heritage Community Bank. It held 12,000 deposits totaling more than $200 million. The FDIC team waited for the last customer to leave. Cheryl Bates prepared to go in.
What sorts of specialists do you have on this team?
We have accountants, we have asset specialists who specialize in loans, we have people who specialize in just the physical facilities, and we have a group of investigators that come in and do a review on the reasons for the bank failure.
Really, your whole team could come in and run the bank?
Yes.
4 months ago, the FDIC and state of Illinois ordered the bank to stop risky lending and raise cash, but Heritage couldn't find new investors. The night of February 27th, no one at the bank knew that the end was minutes away. The FDIC walked into all 5 branches at once. The chief executive, John Saphir, was told that the bank that was his life's work was no longer his. We waited outside as they delivered the news to the employees.
With Heritage Bank, your pay stopped at 6 p.m. At 6:01, you went on a pay which is paid by the FDIC. Unused vacation time, you will be paid for it. You will not lose it.
In that moment, Operation Happy looked pretty grim.
Correct, because I would say a large majority of the employees don't know that the bank is in trouble and that it's about to close.
We want it to be as seamless as possible for your depositors, so no depositor loses any money at all. And they reacted somewhat with dismay and shock that we were there. And it is a very trying period for them. So it is an end to that whole chapter of their lives.
When we walk in, we appear to be the bad guys.
I mean, some of those people have been there more than 20 years.
And those are the ones who take it the hardest because they feel that they have put their life into it and now it's no longer there.
Make sure that no one comes in without FDIC badges.
The employees now work for the FDIC. A public notice went up, and that was the signal to a team of nearly 80 people to take over the bank. They took control of the bank website and added a notice that all deposits were safe. Then they started an inventory of all the assets and liabilities.
What's happening right now?
We're getting the bank personnel assigned with their FDIC counterparts. The accounting people are meeting with our accounting managers, and then we have an investigations group that comes in and does a review of the bank.
They broke the news to the media and prepared to reopen the bank Saturday morning, as usual.
What do you expect from the customers?
I think the customers some of them will come in with a sense of fear.
Fear created the FDIC in 1933 after the Depression set off panics that wiped out even healthy banks.
We've been around for 75 years. Nobody's ever lost a penny of insured deposits.
No depositor has ever lost a penny
no,
since the FDIC went into business.
That's right, of insured deposits. That's absolutely right, which is why you need to make sure you're below the insured deposit limits. But no one's ever lost a penny.
And the insured deposit limit is what?
Right now it's $250,000. That's the base limit.
When the FDIC comes in and makes depositors whole at a bank that has failed,
Right.
Is that tax money?
No, it is money from our reserves, and we are funded by insurance premiums that are assessed on banks. So no, it is not taxpayer money.
FDIC Chairman Sheila Bair is a former Treasury official and professor of finance who's written children's books on the wisdom of saving.
Maybe some of the CEOs on Wall Street should have read the children's books.
Maybe so. Maybe so.
Bair warned 2 years ago that bad mortgages threatened the financial system. Now she's managing the biggest bank failures in years, including the collapse of Washington Mutual and last summer's sudden failure of IndyMac in California.
We were told we would get in. Stay open an extra hour.
When IndyMac failed, you were watching these scenes on television
Yes,
of
I
people
was,
lining
yes.
up outside the bank like it was 1932.
Yes, it was. It was
What did you
amazing.
think of that?
So I think people just forgot that banks do fail and how the FDIC works. Their money was safe. It was safe. It was probably the safest place in the world to have your money because we were operating the institution at that point.
What sort of hit was that on your balance sheet?
I think we ended up it was over $9 billion for a $33 billion. Yes, it was very stiff.
The question becomes, how many times can the FDIC do that? At what point is the FDIC broke?
The FDIC is backed by the full faith and credit of the United States government. So if we need to, we try not to and don't want to, but if we need to, we can borrow from Treasury to make up for any shortfall.
So the FDIC never goes broke?
We don't go broke. No, we are the government. We're backed by the full faith and credit of the United States government.
But customers at the former Heritage Community Bank outside Chicago weren't so sure about the safety of their money. On Saturday morning, the bank reopened on time, and the FDIC's Ricky McCullough stood at the front door. The people who were coming in this morning, what were they asking you?
Can I still write checks? Can I access my safe deposit box? Can I use my ATM machine?
And to all of those questions, you answered what?
Yes.
Customer Bill Hess showed up on a mission with an empty briefcase. He intended to leave with all of his money.
We'd be glad to answer any questions for you.
He said, "I don't care anymore."
And so I became a little concerned. So I came inside. And one of the things that he told me as he opened up his briefcase, he said, well, I don't have a gun in here. So I said, well, that's good. I can't wait.
McCullough explained to Hess and his wife Audrey that their savings were safe.
So if you have a single account, that's $250. If you have a single account, that's $250. So now that's $500.
Hess's briefcase was empty when he came in and empty when he came out.
We just thought we were going to see closed and the doors locked.
Yeah.
You know,
So how do you feel now that you've talked to them?
It's fine.
assured.
Yeah.
Assured. Yes.
You feel
fine.
assured?
Yes. Yes.
You had confidence in the FDIC.
FDIC, right, yeah. Now, if they can't pay you, then I won't have confidence in them either.
One customer did take most of her money out, but for many, their concern was for the bank employees.
I hope you all stay, and I hope they don't let anybody go.
We're fine.
Good.
You just keep coming back to see us.
There are three ways the FDIC takes over a bank. It can close it and pay off depositors, run the bank itself, or more often, it'll try to find a buyer.
We do have bids from 5 different parties.
A few days before the takeover of Heritage Community Bank, we were at the FDIC office in Dallas, where they were holding a secret online auction in hopes of finding a buyer for Heritage.
I wanted to congratulate you. We've chosen to accept one of your 3 bids.
The winner was MB Financial, a $9 billion Chicago bank. The night of the takeover, all of Heritage Communities branches became MB banks. Mitchell Feiger is MB's CEO.
It's almost as if nothing had happened.
Almost nothing did happen. It's the same products, it's the same services, it's the same people taking care of the same customers.
It was a sweet deal for Feiger. The FDIC paid MB Financial $3.5 million. MB got all of the deposits, customers, and loans. If some of those loans go bad in the future, the FDIC will pick up at least 80% of the losses. We wondered what Feiger thinks of the health of banking today.
You have to believe that dozens and dozens and dozens of more banks have to fail. But it's okay.
What do you mean it's okay?
It's okay because I think the process is smooth. Depositors are fully protected by an industry-funded FDIC insurance. And I think that taking out the weak players and taking some capacity out of the industry is good. It's good for the industry. It's good for the survivors. It will produce at the end a much healthier banking system.
If you can put Heritage Community Bank out of its misery, why can't you do the same with Citigroup?
First of all, I don't talk about open and operating institutions. We can only deal with the resolution of a bank, a federally chartered or state chartered depository institution. And these very large institutions that are creating the headlines now, these are really very large financial organizations. So it's more than a bank. It's a broker-dealer. It's offshore operations. It's foreign deposits.
We notice that while giant banks get bailed out, investors in failed community banks like Heritage get wiped out.
Ben Bernanke, the chairman of the Federal Reserve, says that the system is unfair for smaller banks, and that's just the way it is.
Well, I think that's true. And going forward, I think we need to really review the size of these institutions and whether we should do something about that.
Baer surprised us when she suggested that maybe the mega banks, those bailed out by the taxpayers, shouldn't be allowed to exist in the future.
I think that may be something Congress needs to think about.
Actually limit how big a bank can be.
Yeah. Well, I think taxpayers rightfully should ask that if an institution has become so large that there is no alternative except for the taxpayers to provide support, should we allow so many institutions to exceed that kind of threshold?
And the idea would be that no bank would grow so large that it posed a systemic risk to the economy. That'd be a very different world.
It would be a different world.
Because Heritage Community Bank was bought by MB Financial, the FDIC didn't have to pay depositors. Even accounts over the insurance limit were safe. For Cheryl Bates, it was her fourth closing this year, but certainly not her last.
What do you want people to think when you tell them you're from the FDIC?
I always want them to think that I'm one of the good guys and that we want to make sure that they get their money back. Should their bank fail, that they are going to be okay because the FDIC is there.
To find out if your money is safe, go to 60minutes.com.